The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman. My pleasure to be here Monday through Friday, and this is, of course, the very last trading day of September. And are they going to do certain things to the market to make the candle, that monthly candle, look good? Could be. So what do we have? We have the E-minis early this morning, kind of weak, and now they're up 11. And the 120-minute chart, this is a leg A, but I have to call it a gray leg A. Why? Because it's underneath the previous high of 2167 at 2159. Really important here. Let me just run this by you to show you something that's going on. I'm going to move that, make it smaller. Look, the weekly chart is still within this wedging formation in this narrowing trend line, uptrend and downtrend line. And until it takes out 2183, which almost takes it to the 2185 high, it's within that range that says you're going to an apex. If you break down here, in other words, if you go underneath last week's low of 2126, anytime in the next week or two, without breaking that 21, let's right for now, I'm going to make it real tight. Let's call it 2172 high. Trend line high, that is. Then if we start to break down and go under the 9-period moving average of 2147, there's a chance we make that H pattern. But wait a minute, there are a bunch of things that are going on. Look at the monthly chart. I've been talking about this for ages. Monthly charts are still very positive. There is a chance that if in October, the first week of October, that's next week. Now, if today we reverse the up move in the Dow, which is up 151, and we close only up 80. I say only up 80. Why? Because there would be quite a big pullback, and then gap down Monday and stay down on Monday and Tuesday. Then that monthly chart is going to say, hey, remember that technique that you have, 2185, 2182.75 for the highs of the last 2 months? That's that Chapman wave 2-bar reversal pattern. So I'm watching this really closely. Now, let's go to the support levels on the E-mini. 2152 is near-term support. If it breaks that, it's going to go down to the 2144 level. And on the upside, a close today above 2163 would really impart the kind of information that says that the trend, well, now it's a declining trend line, resistance between 2169 and 2171. That's going to be next. And if that's taken out in the next 2-3 days, that's very positive. Now let's run the numbers. Last day of the week, last day of the month, I'm going to do all the, excuse me, I'm going to do all the key indices. Here we go. Dow, stuck in a trading range, still looking very weak, still in a sell mode in the daily, sell signal in the weekly chart, technically having been under the 9-period moving average for 4 weeks. I'd have to even say that I could call it a sell mode. That could change, and that'll change if the 18,500s is approached next week. But in the meantime, this is so far being quite weak action in terms of the technicals. But in terms of prices, I said to subscribers to my opening call this morning, hey, this is really to take from May the 15th at 18,688. 88, did I? Is that 88 or 68? Sorry, 18,000, and I thought that was wrong. 18,668, the all-time high, to only come down to 17,992, a 600-point, less than a 600-point move to the downside. And right now, you're actually less than just over 300 points to the downside with a month. This is really very good action. Aha, but very specific action. There are a couple of things that I want to look at here. Let me just expand this. See this peak C right now is almost certain that it's going to be peak C at the end of the day today. No matter how high they take it, they're not going to take it to 18,669. 300 points, more than 300 points from here. I don't think so. But what's really working is that the monthly chart is still technically on a price movement very strong. On a purely technical aspect, the stochastics at 89%, that's very good. And the MACD, although it's way lower, is crossing positive, and that's going to be a really good sign, at least going into the close today. So the S&P, SPX, let me just quickly cover that. Same thing. S&P has 2180 as very strong resistance to break out of a trend line. Resistance and support has to be at 2159. 2152 would be next if it took out the that level of the 9-period moving average at 2159. But what's most important is, again, the monthly chart is spectacular, and the weekly chart has that triangle. Now, I could turn this into, quite easily, I could turn it both in the Dow and the S&P. I could turn it into a cup formation. The cup formation suggests that it could squeak to a new high. 2193.81 was the all-time high. Yeah, it could go a little higher, but the chances are that if it did that, then although it's really positive, it also says just for a moment we're going to have limited upside, but it also means you've got limited downside. So it is positive. It isn't a spectacular break to the upside, but if it happens next week, that starts leg C. When you go quickly from an A to a B to a C, that always says you're accelerating, but you've got to break out significantly in that leg C. You can't just stop dead, just a couple of points higher and then turn down. That's actually a big negative. So let's go on, and we've got the QQQ series. Now, this is what I'm expecting to go to leg D. The other day I said, I don't know how it's going to do that. We needed the SMHs to go to a new all-time high, a recovery high, and we needed the QQQs to go to a new recovery high for leg D. Both of them needed it. Well, yesterday, the SMHs went to leg D, and they've extended it very sharply today. We had a short 1 penny above the previous high of 68.39, so we got taken out for what, a 60 cent, not even a 1%, maybe a 1% loss. It's okay. We're going to be looking at this very closely. Why? Because if this extends even higher, I'm going to just have to say that to me is a bullish breakout. I would not fight the market if the semiconductors have a bullish breakout, and it's not an all-time high, because the all-time high is way, look at this, at the 100.20 level. We're at 69.66, a long way to go. But this left side, right side price break with the MACD and stochastic very strong. Now I'm saying to myself, okay, you tried the short, didn't work, step aside, because this is going to be an absolutely key indicator. The SMH is the Semiconductor Market Vectors ETF, trading at 69.67, up $1.30. Now let's go to the IWM. Oh, am I going to run out of time? I am. IWM, not good action at all. It's trading up $1.26 at 124.11. But I'm talking about the chart pattern. Today it's a good action, but the chart pattern is not that good. The weekly, though, is holding very well. So we're going to be watching that. A break above 126.30 by next week would be really encouraging. And a break down below 121 would be very poor. It's at 124.15. I'm going to go to the gold right now. Gold is trading down just a little bit. It's just stuck in this range, going to lower lows and lower highs. And the dollar, and I'll get to crude oil in a minute, the dollar, had a very nice move earlier on. Now it's only up 3 cents at 95.56. And the TLT, as we go to the break, is down quite sharply, 1.28 and 137.47. Basil Chapman, Tiger Ignitions Hour, Dow's up 191, and we'll be right back.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new market-safe focused commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 6 equally weighted commodities, including gold, silver, copper, nickel, soybeans, and sugar, in one powerful CD. With annual pricing caps of 50% per component, you could earn up to a 50% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The October 13th funding deadline will be here before you know it. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back. So just before I forget, I will not be here for the first 2 days of next week. Be away, and so I'm going to do a kind of a wrap up right now. Let me just go right into it in case we run out of time, because this is going to be the overview for the beginning of October, and I'll tell you what I'm looking at. Crude oil is up 22 cents at 48.05 right now. It's all very well looking at the daily, the weekly, and the monthly, but let's look at it in a little different context, because I think that crude oil is going to have a say in at least giving support to this market. That's the reason why, for my subscribers, we've been very selective. We've got our short position in the Dow from higher up, but the most important thing is I'm looking at specific stocks that are starting to show weakness and certain stocks that are kind of key stocks, and I'm going to talk about that in a moment. So let's just run this through. When you're looking at crude oil in this particular chart, that's the daily chart. Let me just make it as easy as possible. I'm going to draw a trend line right like this. I'm going to kind of make it thick for the moment. I'm going to make it single style, is just one line, no dash. I'm going to make it kind of thick. And I'm also going to make it a different color. I think blue is the one that usually shows up as a stark contrast to anything else. But I'm also going to put in a little transparency so you can see the underlying configuration. So look, sneeze, excuse me. I was just thinking this morning, how do these politicians do it? How do they talk for so long, day in, day out, day in, day out? And except for those coughing spells that Hillary had, most of the time they are pretty good. They don't have to blow their nose or to scratch their eyebrow, whatever it is. They just know how to do it. Thank you, thank you. I have to admire them for that reason. So here we go. Look at this trend line. And now I'm going to make a parallel trend line. I want to show you something. You can take trend lines and you can do all sorts of things with it. I like to keep it as simple as possible. This channel was essentially rising from the low that was made. The letters you're looking at here, they're missing the price point, because this is a continuous contract. And when it gets smoothed out, there's a November contract, the price changes, but the configuration does not. So absolutely, this here B is right there. That's a B. And there's the C and there's your D, okay, and on the 11th of February. So from that moment on until there was a breakdown on the 7th of July when crude oil, having gone to the 54 area, breaks down underneath 46. Right there, you've got a trend change. Now let's do the same thing. Nice thick lines. I like to make them parallel if I can, because parallel, I'm going to go to something else in a moment. I'm going to show you a whole bunch of things. In fact, I'm going to treat this as a very important technical Friday. There are other things I wanted to do, but there's no time for that right now. This is a really important key moment. And the key moment, why? Because if there's going to be a rally based on crude oil, this rally has to incorporate my Dow Quartet, GE, IBM, MMM, and UTX, and it's not. So I'm very skeptical about this move. I think it's just news-related. I think you've got almost like a single leg A news-related spike to the upside. So there's your down channel. Now, if I use the channel, we've gone to the upside, but there's something else that we look at in the Chapman wave, and what is that? That's a move that looks like this. New parallel, make it smaller, make it steeper, and make it like that. And now look what we've got. We've got a pattern that said, yeah, there was in fact a channel. You can treat this as a channel. But even more important, look what we've got. We've got style, weight, let me go nice and thick. You've got that, and you've got that. So all of a sudden, you've got the potential here for a Chapman wave, cup formation. And that cup formation says that if there is a spike above 49.97, three things have to happen. One is, in this case, it has to hold and close above that, and it really needs to get into the 50s. It needs to trade in a different digit. It has to go from the 40s to the 50s and hold there. You get that, and that's going to be a market positive, at least in the sense that very often when crude oil rallies, we've got this chart here. Let me just for 1 second take a break. I haven't looked at it for a little while, but it's right there, I believe. There it is. Look, you see the direction of the green lines and the red lines? You see this massive sharp pullback, but you see that the red line did pull back, not in the same proportion, but directionally it pulled back. You see today it's rallying, but it's sort of stalling right now. See that this particular move has gone up. The green has gone up. Well, the red is the USO, which is the United States Oil Fund, and the green is the SPY, this S&P 500 trading vehicle. Hey, wait a minute. What's going on? This is the 5-minute chart, and it does not, the straight line, the vertical line, closes out at 4 o'clock and starts again the next day at 8:30. So this is trading hours, and it's fascinating. Why? Because it's giving you a good sense that disproportionately in percentage terms, but very much proportionately in directional terms, you've got crude oil assisting the S&P. It's looking like it's just starting to stall now, but it's 11:30 in the day, not even 2 hours into the trading day, but it is a Friday and it is the end of the month. So I wanted to show you that. Now we're going to get back to what I was looking at. Now I'm going to just extend this out like that. So what I wanted to show you is that the pattern has changed. Remember, my contention is patterns are very simple. They either go straight up or straight down in a straight line, or they make an arch or an inverted V, or a cup, or a V-shaped pattern. And in this case, it's a cup pattern. It's also a little dreaded H. You see I drew that H in there? That was a successful test as the MACD and stochastic actually started to rally. They were very poor the other day, but all of a sudden you've got the news, the OPEC. Basically what's happening is they try to build a floor, and that floor should last a little while, and then the floor should break and you should go straight down. That's the way I'm looking at it. In the meantime, on the short term, it is helping a bunch of things. Now, I've got this as B, but I have to call it a gray B. What do I do? Why do I do that in the Chapman wave methodology? Because this was a B minus, and there's a chance that if today we don't take out 48.32, but we do that Monday, you've got an overlapping wave, and that overlapping wave in the Chapman wave, I haven't got my CD out. It's a chapter. It's called, let me just see, overlapping wave. Inside Buy Mode, this is chapter 16 of my CD introducing the Chapman Wave methodology, slide 317, a really important chapter. And I'll try to get to it during the break. So what we're looking at here is that the crude oil continuous contract has a chance if it breaks that 200-period moving average. What if it does it today? Well, then that's leg B. What if it does it today and it goes above 49.97? I don't think it can, but if it does, then that becomes a reactivated leg C. But what's really exciting is that if it stalls here and by only Tuesday or Wednesday, there's a break to the upside, you could get what I call an overlapping wave, and that takes you to at least a D. That means not only do you go to an overlapping C where you reactivate that previous B from the 19th of August, but you've got a brand new C, and that C is strong enough as you think of the highway, as you're coming off the exit ramp, you're coming onto the highway, you have to get in with the traffic, and you've got momentum with everything going for you. That should take you to at least D, and that would be very positive. Crude oil breaks down under 46. I'll be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. So the chapter that I was just looking at, this is the overlapping wave right here. Let's see, what did I say it was? Chapter, I should have these memorized after all these years. Chapter 16, right there, overlapping wave. It explains what's going on. But what basically happens, this is a very interesting one. This is a multi-boom dynamics. Does it even exist anymore? It had AB minus, ABC, and then ABC overlapping wave D. This is an even better one here. I explained the overlapping wave and why it's an overlapping wave. And most importantly, let me just give you the picture. There it is. So here it is. This is Boeing way back in 2004. It goes to a peak B at about 51.50 and it pulls back. And now it goes to like an inside buy mode, and it goes A, B, pulls back, and that B didn't take out the high that was made previously, but when it does, it goes to an overlapping leg C, and then what does it do? It goes even higher, and as you can see here, this is the demonstration. It actually not only goes to a C, it goes to D, E, and an F, and then we use the MACD and the stochastic to see whether or not there's strength and if there's going to be a weakness on any bounce on the right side. In this case, it failed. So that's it, and it's a very important concept. Let me just show you. Oh, I never even showed you the E-minis. So let me do this. I'm going to do two things here because they're very important. This is the E-mini, and it had almost an overlapping wave over there, but instead it made a peak E from the low of 21.35. I think it was 25.35, something or other. And then it had a little spike, and that spike said, is that an E or is the next one an F/A? Well, it turns out it was an F/A, and then it broke out and it's going to be C, and this is going to be leg D. Let me just change that. Oops, let me just edit it right here just to make clear what it is. And now we're at D, and we've gone from a left side, right side price time match where we broke down. Isn't it amazing what's been happening lately? So now what we're doing is we've gone to D, just a little above the high of 12.30 on the 29th. It was 2 days ago before the breakdown. And then the next high is going to be 21.65s. So far, this is buying because there are a lot of people that were short based on many aspects. But my thinking here is that we have to treat it first as if it's a bounce. Now, this is so fascinating because I need to go through things. XPD was mentioned in a question that I had from, I think GT was the questioner. So this is the ARCA Securities Broker Index. Yeah, this is important because this particular pattern has the potential to make a Chapman wave right here. That's a Chapman wave stalk leg formation. I would have actually not, because it took out that low on the left side. I'm going to have to take that away and say nope, that negates it. This says that if there is a new high in the ARCA index trading at in the XBD, the Securities Broker Dealer ETF, the high of the 22nd at 175.64, that's 2 points above. If that's taken out, not only will that extend to leg D in the weekly, which is still looking very good, the weekly chart's looking very good, that actually could reignite the upside. It could be a G right arm extension because the technicals are so weak, but all I'm saying is that it helps. It helps the Dow. Look, let me just show you this right here. I have, this is the sideways action that I'm talking about in the Dow. And that's very important. It's held this uptrend line. It hasn't broken any downtrend resistance line yet. But what's really important is I was going to show this in my for my subscribers, and it was just getting so complicated. I said, you know what? In Chapman Wave 5, I don't want to even deal with that. I'd rather look at this particular chart. I'm going to explain this in a minute because it's very important to what happens next week. That on each successively higher high at 18,668, the all-time high in the Dow, the 120-minute Dow chart, when we came back down and we did that test on the 6th of September, that was with way weaker technicals. When it went to the high of right there, at 11:30 on the 22nd, the technicals were improving. And when we did the retest just the other day on the 29th at 11:30, right at this time that we're talking about right now, on the 29th, the technicals were much weaker. And now we're having another bounce. And basically what this is saying is that we're in a trading band. You can get whipsawed to the upside, to the downside, to the whipsawed. And as long as you either have a position and hold it, because it should come back to that position up and down. That's number one. Or whenever you're getting close to the 18,100 to 18,000 level, at this particular point, you can still consider buying. And as soon as we get to the 18,350, maybe 18,420 area, so far the action to do is to have a short position until the trading range breaks. And that's why next week is so important. I wanted to get that out of the way. Next thing is I want you to talk about the VIX, VIX.X. Oh, we've got George in New York. George, how are you?
Basil, good morning.
Good morning.
How
I
are
just
you
want to
today?
finish. I'm good. Just let me finish. The VIX index
Absolutely.
is down at 1274. It's down $1.28. Once again on a Friday, we've got the VIX index closing sharply lower, just as it did last Friday. That's confirming for me that there's some buying support, maybe held by crude oil, but at the same time, I have to think trading range until we break below 17,900 on the downside and 18,580. Let's call it 18,600 on the upside. That'll change things. Otherwise, we're in trading range. George, OAS, we were talking about yesterday.
Yes.
Good.
Yes,
So
correct.
if you can briefly summarize what you had sent to me, I was going to talk about it today, but I needed just to do some other things because the market suddenly got some spark of interest, mostly because of the fact that Deutsche Bank, or maybe somebody's coming in to do a little saving there. I'm not sure that that's going to help, but anyway, that's the way it is. So,
That's right.
OAS.
Correct.
This is
So you were
Oasis.
saying yesterday then I could add to the position between 10 and 980, you were saying. Is that correct?
That's the way I've been looking at it, yes. Now, a lot's going to happen on the bounce that we're undertaking right now. It's actually more than a bounce. This is really a rally. And
Yeah.
I'm saying that I'm looking at the monthly chart and peak F. This is a major downturn. So what we're looking at here has to be considered, at least at this point, we have to consider it more I'm not even going to say a short to intermediate term. We have to treat it as an aberration to the major trend, which is so far down. But the weekly chart has had really good support in the 9s, and now it's at 1152. And if it does go into the 12s, how it handles 1372, which would be the next major peak on the left side, is going to be imperative to monitor. But in the meantime, what I'd say to you is, the position that you're in is really good for now, but if you have patience and you want to add to it with a certain safety factor, I would prefer to see it come back down. And the 9-period moving average at 1024, that area between 1024 and 10 should really be very good support if the weekly chart is correct in saying, hey, I'm now moving into a more intermediate term phase. It's like almost a second phase. That's in. I'm calling it leg C for now. Technically, I should say E/C, but I like the way the technicals are doing. So I've got my stuff out the way. As soon as we get back, I'm going to hear from you. So we'll be back with George in a moment. The Dow's up 179, S&P's up 17. We're looking at Oasis Petroleum, OAS, up 35 cents at 11.54. We'll be right back after these important messages.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, accurate active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. We're back. Just want to show the 10-minute E-mini actually went right to the left side, 1220 on the 29th, high of 2162. It's now trying to tackle the high of the 1020 time frame of 2165. I think it was a little consolidation here on the 10-minute chart. And I'm going to give George the floor for the next 2.5 minutes. George, take it away. Let's hear about Oasis.
Well, there's not much to say about it, of course, that it's a fracker and it's in the Bakken region. But I'm not only talking about that. I think what we should be looking at is possibly just in general the oil fracking stocks. And in my email I sent you, excuse me, I've been monitoring, as well as Oasis, Whiting, EOG, Matador, and of course the large caps such as ConocoPhillips and Marathon, MRO.
Okay.
And I think those are the ones we should be looking at, and here's my reason for that. On the positive side, from what I understand with the fracking industry, is that now they're able to drill these wells on land economically, and they could be up and running within a few months versus offshore drilling. Again, as I said in the email, Andy Heck is the expert on this, so he could educate us more on this.
Okay, good. So let me just ask you a question here. Is there any legislation coming along, since I'm not sure what the proven record is as far as the earthquakes and tremors and that sort of thing that they say is caused by the fracking. What would be in the way? What would suddenly get in the way? Or do you think it's at this point, at least for the beginning, until the beginning of the year, there's going to be no impediment there?
Well, I mean, it's a great question what you're saying, because I have that on my mind as well, and I definitely agree with you there. That is one of the important questions. You know, I'm sure that there's inspectors on these wells for the permits and all on a continual basis.
They have to be there, yes.
Yeah, there have been earthquakes and tremors, you know, like you saw recently in Oklahoma going on. You know, and that's by the other drilling region. So you are right on that. More or less, my other risks that I was looking at, in all honesty, is, of course, one, global overproduction, because you have a lot of trading houses that have been involved in oil for years, and it's sitting offshore in tankers. So that's one risk. I think the hybrid cars are more and more being produced now. So now that's getting cut up into another energy sector. We have solar energy, which has dropped down a lot for the solar panels the last number of years. Plus, we have wind power.
Yes. Right.
So there are risks out there. Without a doubt, the pie is getting cut up now as we go forward.
Which is my contention. My contention with crude oil, that the highs for at least this entire economic phase, I think, have been reached, and that we're going to, until there is a major crisis, economic crisis, I don't see a rekindling of the oil sector as being, seeing oil go back up into the 60, 70, 80 area and hold.
No, I agree.
No,
totally.
not in this. Yeah.
Totally. But the frackers, if all goes well with the fracking, with regulation, and there's, no, God forbid, problems with fracking per se, what the positive is, to me, is lower expenses to drill oil versus going offshore, where it takes you a few years to set up an oil rig, and it could cost billions of dollars.
Also, it's the very first time in the history of oil production that we've seen where the competition isn't just a momentary competition, whereas before the oil companies would buy up whatever new technology there was, and they maybe just set it aside and never use it. Now I think it is proliferating so broadly that I think that we're looking at a situation where it is a done deal that crude is anything but a transitory, a momentary splurge to the upside, but then it's going to come back down. Looks almost like an oil well when you get your initial splurge and then they cap it and all of a sudden things change. So I can see that this is different. This is in an area where it is the use of oil, which is actually still pretty high, and that's really what we're looking at.
Yeah,
I'm with you. I like it, and I think your choice is being quite exceptional. And OAS, I think,
and then with that said, I would look at one of the oil drillers. It's a mid-cap stock, and it's called, the ticker is PTEN, and this is Patterson UTI Energy.
Haven't seen them in ages. Wow, look at that chart. That's very nice. Going from the 11 area to 20, doubling in the last.
Well, here's the thing. They have a lot of onshore drilling rigs. They're land-based.
Okay.
And they have what we call these walking oil rigs, where they call it an apex walking rig, and it could go from one well to the other, and it just crawls along the ground.
Oh, really?
Yes. If you go to their website, you can see a video on it. It's fascinating.
Oh, that's really good to know. Okay. Oh, I appreciate it. You're a font of knowledge. Thank you so much.
Basil, enjoy the weekend. Good holidays.
Good holidays to
healthy.
you. And thank you very much for calling. So, yeah, that's very important.
Basil,
Thank you.
well.
Oh, I think the den, a lot of people in the den are saying thank you for that information. So thank you, George. George in New York, have a great holiday. We'll speak to you soon. So, folks, we're looking at PTEN, UTI Energy. Also looking good. I'd be a little hesitant right at this moment, this big spiral to the upside in leg D, but at 2240, maybe you want to take a look at it between 2120 and 2035 and see how it holds there. Hey, great information. So, folks, let's do this. And before I forget, happy holidays to our Jewish listeners, and certainly a happy New Year. So let's go. And it's always good to have two New Years, so you can get one of them right. Okay. So let's look at this. Now, I said I'd look at the VIX index, and I said the VIX index plummeting today after spiraling yesterday, but closing halfway on the candle, down at 29.91. I contend that below the teens, below 13, there is buying pressure. In the low 13s, there's still buying pressure. But the moment you get to the 15s, watch out for triple-digit pullbacks. In the meantime, this is suggesting that there is a chance that we could go a little higher. And I'm going to do this one more time as we're about to. I said I looked at crude oil in detail. That's what I wanted to do. I wanted to go through GE. Look at this. GE, nice candle today. If you're only looking at the price at up 18 cents at 29.71. Horrible chart formation. It has to be for this these trend lines that I've drawn, the V and the inverted V, up and down, the zigzag sawtooth wave, if GE takes out, oh, that's the break before the, oh, okay, we've got one segment to go. Good. I'll talk about this in the next segment without rushing. We'll take our time and go through it. The GE did a 1-to-1 to the downside. It's holding above the 29.17 support. It's going to be a key indicator for us. I'll be back. Basil Chapman, author of The Opening Call, my daily newsletter, and I'll be back straight after this break. Dow's up 171. S&P is up 17.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hi, folks. We're back. Basil Chapman, and this is what we're looking at here. So Deutsche Bank hits $11 and was it 19 cents? $11.19 yesterday. Today it's trading at $13.04, up 13.59. Actually went all the way to 13.22. Where does that take us? It doesn't even take us to the 9-period exponential moving average of 1378 in the weekly chart. And in fact, although it's taken out the two moves from yesterday's low to today's high, is 1, 2, 3, 4, 5, 6, 7, 8 sessions, 9 sessions. So it's taken out 8 sessions worth of down move, but it is just the start. And if this is going to continue, and sometimes what happens with these financials is that when there is some kind of a hint of salvation, there is a move that goes up, and it goes up, and then all of a sudden the whole mindset changes as it goes off the news and it's climbing away, and then out of the blue there's this one day where the news was wrong. And you've got to be careful. If you're trading this, treat it as a trade. Go in, go out, go in, go out. Get your money out by the end of the day. This is the way I'm thinking of it, because this is not over for Deutsche Bank. So be very careful. Probably it isn't over till you start seeing single digits, right? That's the way these things go. So just be careful. Now, let me go through this again. The chart formations. Did I ever get to this? Yeah, overlapping wave. That's right. And I want you to look at the cup formation. And the cup formation is chapter 15 right here. This is what we were looking at. Remember, 1, 2, there. So within the cup formation, you can get the pattern. It goes in a deep cup formation. And if you're lucky enough, you're able to identify the plumb line, the midpoint where the turnaround occurs, to say, hey, there could be a left side, right side price time match to an important high that was made on the left side. Then you can use all these different techniques: Chapman wave, inside wedge, the green line, the cup. You see this dashed blue line. You can use the left side, right side. I always start from much lower down to see how, which I did in this particular case. It's the gold chart. And then you've got a left side, right side price time match. You've got also the uptrend target line, which also gives you a support line. I didn't put it in here because it would have looked a little messy. So there are a whole bunch of characteristics. And as you're moving along, so you can put these lines. You see, there's the Chapman wave inside track repellent resistance zone, right? There it is. There's the outside channel that I said I would draw. And that keeps going, and it's very important. So, yeah, those are techniques that we would use. And in this particular instance, remember what we were looking at? We were looking at the 120-minute chart. Is this going to go to a leg D? Yeah, it goes to a leg D above 18,366.23. That goes to D. At that point, I suspect we're starting to get into a rather overbought situation. So keep in mind, choppiness is the name of the game. It's really important to know your character of the market. I think that's what we're looking at. Trend starts to pick up when the Dow eventually takes out 17,900 support. Downtrend starts to be impacted. That's number one. Number two, you can continue having this choppy range because of this weekly chart, but it's saying at this particular point, let me open up the weekly chart. At this particular point, there's a lot to go in technical action for the Dow to go towards the all-time high without more time involved in the consolidation to build up strength. And that's really what I want to see. I don't mind if it's time and not price, but you know what? The Fed is in there as well. Any move on the upside, you've got to say, aha, how big is it going to be and how much does it carry? Is it just a single day to the upside, or is it even a single day to the downside before they reverse it? Folks, Basil Chapman, Tiger Technicians Hour. I'll be getting as many charts. I'm not sure how many, but I'll get as many as I can for the weekend to show you what we're looking at and why we've chosen the stocks we have to short and why we're still long some stocks. So, folks, have a wonderful weekend. And as I say, for our Jewish friends, Happy New Year. I will be back on Thursday.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.